Well, okay, so
Now,
yeah. So the first thing that you have to always put it in your mind is finding daily bias, right? So that is the first step. The first step to every model is daily bias.
yeah,
That is the first thing. To find daily bias, we use external range liquidity, right? Now, when we talk about external range liquidity, those are swing highs. This is an external range liquidity. Any swing point you see in the market, this is an external range liquidity. And when we talk about internal range liquidity are fair value gaps, right? So if I'm to clear this from this leg to this leg, internal range liquidity is this fair value gap over here. And another form of internal range liquidity is a change in state of delivery, also known as an order block. Did you get what I just said?
yeah.
So the way price moves, right, is price moves from external range liquidity to internal
Mm-hmm.
range liquidity to external range liquidity to internal range liquidity in that order based on the overall trend of the market. Do you get it? So
Yeah.
to find the trend of the market, right? If you look at the overall trend, you could see that the market is willing to go up. And even apart from the market going up, we have this bearish FEG, right? So if I'm to delete it to this neck, you could see that we have this bearish FEG over here. So if price wants to go down, then we expect it to do what? We expect it to come and raid this external range liquidity. We expect the market to raid this
Mm-hmm.
external range liquidity that is over here. And then come to this internal range liquidity. And then come down to raid the next external range liquidity. Come to another internal range liquidity that will be in this leg. And then continue in that order. If the market really wants to go bearish. Now let's see if the market wants to go bearish. Let's move price forward. So we could clearly see that if the market really wants to go bearish, then it would have respected this FEG and then pushed lower. Now, assuming that it didn't respect this FEG, we also have a bearish FEG over here. So let's see if that one can also push price to go lower. Let's just wait and see. So we could clearly see that up to this point, the market is telling you that it doesn't want to go lower. And the reason is because it's not respecting these bearish FEG that is here. Do you get it?
Mm-hmm.
So let's assume that you even mark your
Yeah.
leg with your fib too, right? And then since you are bearish, you want to look for price in, let's say, premium. You could see that when it even came to this premium FEG, it disrespected it too. So whenever you are confused, whenever you cannot find the direction of price, you have to wait for more data. And then you base on that data to see where price wants to go. So looking at this, price is telling you that it wants to go what? It wants to go bullish because we are disrespecting these bearish
Yeah.
FEG. And apart from that too, we are leaving a bullish FEG over here. Now, if we look at the market, what has happened? We could see that the market has taken external range liquidity over here. So now that the market has taken external range liquidity, it is likely to come for this internal range liquidity. So let's see if the market will come for that internal range liquidity.
Mm-hmm.
So you could see that the market came for this internal range liquidity. And now that the market has come to this internal range liquidity, the market has also left a bearish fair value gap over here that can affect the movement of price. Do you get it? So for us to
Yeah.
continue trading, on trading, we want to wait for the market to tip its hand to us that it wants to go bullish. And if the market wants to go bullish, then it is going to disrespect this bearish FEG. Now let's wait to see if the market is going to do that. Because we are coming to internal range liquidity. So we want to go for external range liquidity if the market really wants to continue in this bullish trend. Now, after this, I will explain something. I'll point on something. So let's see if the market will do that. And we could see that the market did that. It didn't respect this FEG the way I wanted to see, but it did that. Do you get it? And it disrespected this, and immediately disrespected this. That was the market telling us that it wants to go bullish. So anytime that you come to the markets, right, you have to, the first thing you have to identify is what PD arrays is price disrespecting. Do you get it? Are those PD arrays price disrespecting bearish PD arrays or bullish PD arrays? Now, the second question you ask yourself is, what PD arrays is price respecting? So two things, what PD arrays is price disrespecting? And after identifying that, what PD arrays is price respecting? Do you get it? So clearly, if assuming that you have to find your bias using this price action, the first question is what PDR is price disrespecting? We had this bearish FEG, price disrespected it. We had this bullish FEG, price respected it. So my best guess right now is that we've taken external range liquidity. Price has printed this bullish FEG. Since price is respecting this bullish FEG, prices and also disrespecting this bearish FEG, price is likely to be bullish. If price is to come down, I will be bullish. Now let's see what price will do. We left another FEG over here. Let's see if price will come and target. Price didn't. Price went up, printed another bearish bullish FEG. So let's see if price will come down to target. Price didn't, went up, and printed another bullish FEG. Now we've traded external range liquidity, so we want price to retrace. Let's see if price will come and price target, right? Now that price has targeted, it's respecting it. Now from my previous price action, I could see that the market is strong bullish trend. And it's even tipping its hand by printing bullish FEGs, bullish FEGs, bullish FEGs. And these FEGs are telling me that smart money is involved in this price action. So since we are respecting this, if price wants to continue bullish, then we want it to come and raid this external range liquidity. And it is external range liquidity because it's a swing point, all swing high. So let's see if price will go for that. And price went for that. Do you get it? Do you get what I'm trying to say? So let me just put it over here so that you write it in your notes. The first thing is what PD array is price disrespecting. The second is what PD array is price respecting.
Yeah. Okay.
So now that we've realized that this PD array price is respecting it, and also we have this change in state of delivery over here. Now we've created external range liquidity. So we want the market to come for internal range liquidity. And we said internal range liquidities are fair value gaps or other blocks or breaker blocks. So we have this other block over here. Now let's see if price will come back to it. So let's see what price will do. Price went up and printed a fair value gap. We also have a fair value gap printing over here. Let's see what price will do. So price is respecting this fair value gap. So let's see if price will move from there. And then price move to take this external range liquidity. Now in a strong bullish trend, you do not expect price to fully retrace to discounts, right? In a strong bullish trend, you don't expect price to fully come down. That would be exhaustion, right? That would be price exalting its power. Do you get it? In a strong bullish trend, you expect price to make small reversals and then move. If price is coming all the way down, then you should know that price is losing its power. I think you get the reason why it didn't really come down. If you
Yeah.
had to even mark this with your faith, someone will be expecting price to come down to discount, which makes sense, right? But in a strong bullish trend, price will not come there. So now that we've been able to, with this, you should be able to find the bias for price, right? Now, how did I know that these levels are going to get respected, right? How did I know that these levels are going to get respected? Now, the reason why is because of the candle that I had when we tagged that key level, right? Now, when we tag the key level, let's look at how this candle formed. This candle took the previous candle low and then it closed inside, right? It's also formed a strong and a very beautiful reversal candle. And because we are closing inside, it is price telling me that it is likely to continue up the next day. And that is why it's rather chose to move up instead of moving down. Do you get it?
Yeah.
The same scenario over here. Now, if you look at this, right, when we first tagged it, I didn't like how this candle formed. This C2 candle, this candle, or this reversal candle. I didn't like how it's formed because if you look at this lower wick and you look at this upper wick, you could clearly see that this upper wick is longer than this lower wick. And
Yeah.
in some sense, what it's trying to say is that on the lower time frame, it's producing bearish FEGs. Sorry, yeah, bearish FEG. Bearish FEG. And those bearish FEG are more than the bullish FEG that is here. Now, compared to this one, we expect price to be bullish. And even the rate is telling us that price wants to be bullish. On the lower time frame, when you go, what you'll be seeing is bullish FEG. The rate represents FEGs, bullish FEGs. Do you get it? And those bullish FEGs are many. But here, it is the other way around. So in this scenario, you have to wait for another candle to print. And when you waited for another candle to print, you could see that we had a long wick, right? And it also closed inside. And then this wick is perfect than this one. So the likelihood that the third candle is going to distribute is high. And you could see that the third candle went high. Do you get what I'm trying to teach at all? Do you have any question at
Yes.
this point?
I have currently no questions, but
Yes.
I do get it.
Okay. So if we expected to trade the next day, which will be 15th September, then we expect this candle to close over this, right? If we were to close over this, then I'll be convinced that the next candle is likely to continue, right? But another scenario that can let me trade this, although I expected this candle to close over this for me to continue, right? But putting that aside, another scenario that can let me trade the fourth day and target this candle high is when we form a swing point. Now, when the market forms a swing point inside the key level, that is the market telling you that it wants to reverse. So if you look at the markets, right? If you look at the reversal points of the markets, you could see that anytime start by printing a swing point, which is characterized by three candles or made up of three candles. So we have 1, 2, 3 reversed. 1, 2, 3 reversed. Sorry, 1, 2, 3 reversed. You could see that the lower one was the lowest. If you had to look at a bearish reversal too, we have 1, 2, 3, and then we reversed. So because of that, I still expect the fourth day to be bullish, right? Now let's see the fourth day. So you could see that the fourth day went bullish. Do you get it? Now, assuming this fourth day formed something like this, if the fourth day formed something like this, let's say it came like this, it took the third candle and then it closed this way. If the fourth candle forms something like this, then I won't focus on trading the fifth candle. But if the fourth day was to close over like this, and our drawn liquidity is still not graded, then I can focus on trading the fifth candle. Do you get it? So for me to trade the fourth candle, I don't really want to see the third candle closing over this. But if we form that swing point, then I can focus on trading the fourth candle. But to trade the fifth candle, I want the fourth candle to close over. So now that we found that, and price is doing what? Now we are at the current price action. You could clearly see that price has traded external range liquidity, and it is coming for this internal range liquidity. Now there is this FEG. We still don't know if price is going to respect this level. But if price respect this level tomorrow, then we can focus on trading the third day, right?
Yeah.
But if price fails to respect this level and it closes over, then you should know that price is reversing. And then the third day might go lower to maybe to this level. Do you get it? So the first thing to the model is to find bias. That is the first thing, right? That is the first thing, is to find your bias, right?
Yeah.
So let's look at Euro JPY. Let's do our last example on this. This pair isn't that clear.
I have one. Okay.
So I want you to, the same scenario over here, right? The same scenario over here. Now, if you want to perform the bias on this pair, you could clearly see that the market was consolidating. We've taken external range liquidity. We have this internal range liquidity, which is this order block over here. You could see that we had this FEG, that the candle came into it and then the market closed over. So this becomes our order block. So if we really want to continue on bearish, then we expect the candle to respect that level. So let's see. Market didn't do that. And then market is coming up. We also have bullish FEGs that are not really disrespected. The markets might react to that level. Let's see if they will get disrespected fully. Let's see if they will get disrespected fully. So now that they got disrespected, we can, based on that, to say that the market is not willing to go down. Do you get it? The market is not willing to go down because we are expecting that. Now, even assuming that you draw your fib, right? You draw your fib, right? And you want to take price, you want to take trade in premium. Now, if you want to take trade in premium, you could see that this candle, when we took this previous candle, price didn't close inside the range. So because price didn't close inside that range, there is no way I'll focus on trading this third candle. I want it to close perfectly inside that range. Now, we are disrespecting that bullish FEG. And then this inversion favor will be sold in price. Now, let's see what will happen. So anytime that you are confused, right, you should just wait for more data. Do you get it?
Yeah. Yeah.
So let's just see. So we rated this external range liquidity. If price wants to continue bullish, then we expect this FEG to hold. I don't use premium and discounts all the time, but assuming you want to mark your premium and discounts, someone will be
Okay. Yeah.
there is not even any key level over here. And
Yeah.
the best thing is this. Let's see on this completed pair if it's going down to discounts. Let's see something. So yeah, so you could clearly see that you can even add looking for SMT to your
Okay, yeah.
listing,
Yeah.
your model. You could see that it came to even discount because we rated that on 8 correlated pair. You failed to rate that. So if it is NASDAQ 2, then you'll be using ES or YX. So now let's see if you go, and we're also getting a perfect C2 closure. So let's see if the third candle will distribute. And you can see the third candle distributed. So you just have to find the PDRAs that price is disrespected. And if you are confused, now you can see that here, price failed to move down. So let's assume that you are waiting for this one. Now this one, you didn't get a perfect candle 2 closure. So you wait this. Let me just zoom out. Assuming that you wanted that one to hold. You didn't get a perfect candle 2 closure. So you wait for the third candle to, assuming maybe you want to get more data, but the way the third candle is being printed should tell you that the market is not willing to go down. It even didn't form a swing point. It formed something nasty, right? So you just wait for more price action. Now let's see what will happen next. So we've taken this external range liquidity over here, and we've came to this fair value gap. But then price is disrespecting the 50% of the fair value gap. So let's see, let's allow more data. So you could clearly see that we came down and rated it, but still price is not respecting, it's respecting the 50% of that fair value gap. But it can still hold though. That's not really a strong conviction for me. So let's see what they can do. Although it distributed, but I wouldn't have traded since my FEG was the 50% of disrespected. Now let's see, now that we've taken this external range liquidity, let's see if you will come for this other block. If not, we have a fair value gap. Let's see if price will come for it. So we came for that. Now, when we came for this fair value gap, right, you could see that between the previous candle, we are also closing inside. So let's see how the third candle will open. A minute. Let's see how the third candle will open. I didn't really want it to move up at once, but you could see that the third candle went up. Right. One thing that you can also use is to mark your previous candle. Right. Now, if you mark your previous candle, if you expect the third candle to be a distribution, if you expect the third candle to be a distribution, then you expect it to do or to open at the upper half. So in this scenario, I'll be even doubting to trade this third candle because I wanted to open at the upper half, right? But since the third candle is printing so strongly, we can focus on trading the fourth candle to this previous daily high.
Okay, yes.
And you can see that the fourth candle went there.